Is this really a stock market phenomenon with a little bit of treasuries, or might this spread into the basic economy? What will you be looking at to determine that? What are things like high yield spreads looking like? Are there other indications that this might be spreading into other asset classes?
Well, it's very interesting. I mean, let's just start with realized correlation. Realized correlation across stocks increases with the VIX and goes down with the VIX. What's really interesting about this move, David, is that the spike in realized correlation has been extremely tepid here, and certainly relative to prior VIX spikes. And you can measure it like the realized correlation relative to the VIX ratio is actually at lifetime lows here, right? So that kind of suggests that actually for all of the sort of ugly feelings that you feel in your stomach right now about the market and the bottom falling out, that there is some order to this sell-off, and that the correlation, there is a lot of discrimination about what stocks and sectors are getting sold and what are outperformers. And I think that's a significant metric to keep your eye on here as we go through this.
And Michael, as you look at it, do you have any sense of how much of this really is a matter of the economy and the markets on the one hand, or really Washington on the other? Is it just a coincidence that we are going through some of the things we're going through in Washington right now when this is happening, or might there be a connection, particularly as the markets and investors see Congress apparently at least willing to take on more and more debt, more and more deficit spending?
Yeah, well, I mean, I would say this, David, that regarding the short-term issues on spending and all that, and a deal here, that's relative. That's kind of noise here. But you're touching on a very important issue, which is that post the tax bill, we are talking about $1 trillion, give or take, of incremental budget deficit, and I think that is one of the things that is going to maybe make both the dollar and rates potentially be perceived in a different way than they had before. That's a big number, and what's very interesting to see is how the dollar, despite these higher rates, higher nominal rates, higher real rates, the dollar bid is really not materializing here. And I think there's the potential for the second half of the year to see higher rates with a weaker dollar, which is really not something that the White House or a lot of people would want to see. But that's a condition which is something that we saw play out a little bit in the UK after Brexit as well. So it's definitely something to keep your eye on here.